All right. Thanks, everybody. Everyone should be able to hear okay and see the screen all right. Welcome. Happy Valentine's Day. All right. Good stuff. So let's get started. Some things to go over here. Oops. Yeah, everybody should be able to hear okay. All right. So I want to start with PowerPoint here to go over two things specifically, and then we'll spend plenty of time on the live chart today. Okay. We always try to do a combination of learning and then live market application. This is a trade that I took this morning. I don't know if anybody else take this trade in the euro. It was a nice buy around 136.85, 86. I'm looking at the euro futures for a rally up to here, but getting out certainly before that. Okay. Background music, yeah, I don't have any background music here. Maybe you're hearing something else. I'm not sure. James, you took it. Nice job. But tying it into today's lesson, what alerted me to this opportunity was not so much. You may look at this yellow, demand zone here and say, well, that doesn't look like much. And yeah, exactly, Mike. That's kind of what I'm getting into now. So you might look at this demand zone and say, well, boy, that's tough to identify. How are you going to identify that? And I would tend to agree with you. But what alerted me to this was this move was this right here. And this is the topic that we're going to get into today. Okay? This explosive move here told me that a couple things. So we'll get into that in just a few minutes. But let me go to the PowerPoint for a minute. And before we get started, I've been saying for quite a long time, I actually feel silly. I've been saying it so long. We're together for about 45 minutes, a couple times a month. Okay. Yeah, RFK, we can remind me of that when we get to the live chart. We'll take a look. So, I've been saying for quite a while, that we're gonna put a full, online course and application package together for you, because we're really only together for 45 minutes twice a month. Not enough time to really dig in and dive into everything we need to, and all that. So, thanks to some help from FXCM and a few other things, we're able to put something together for you. So let me bring up the PowerPoint here. We'll start with that real quick. So we've got a couple workshops coming up, and this is an invitation only for FX Street members. Okay, this is going to be on February 18th and 21st. There'll be 45-minute sessions. What they are is a preview for a full online course and live trading program. So it's actually a very full course. I'll be delivering it to you live. And I've wanted to do this for a very, very long time. We just haven't been able to for a number of reasons. But full online course, so it'll be it's a multi-part series of learning and then multiple live trading sessions that accompany that. But this on the 18th or the 21st, if whichever one you can make, 45 minutes. It's a preview, so you can know exactly what you're getting into, and if you're interested in it, and all that good stuff. Here's the link below to register. Now I want to apologize in advance. Registrations are limited, so if you try to register and there's not enough space left for this one, I just popped the link in there, the registration link. This is the registration for the preview. If you try to register and it doesn't let you, we'll try to do this again at some point. So I just want to apologize in advance. So Boyke, great question. You'll learn more about that in the preview. But what I've been waiting for, Boyke, is a way to offer this opportunity to you folks at no cost. So I'll show you how that works when during the preview. Okay. All right, so there is a cost to it, but for those who qualify, you can get the entire course and program and package for free. But I'll tell you all about that during the preview. So the preview, again, is the 18th and the 21st. Like I said, registrations are limited. We didn't want too many people in there. I forget what the cap is. They told me yesterday. I'll go look. But so again, I apologize in advance if you register and it's filled up. But anyway, there's a registration link in the chat window. I just popped it in there, and it's from noon to 12 to 12:45 Eastern on those 2 dates. So don't pick both. Just pick one or the other, whichever one you can make. We'll go over some core strategy basics in there also. It's not just going to be a preview for the program. And we'll obviously look at the markets. But I'm very excited about it. I've wanted to offer you folks something like this for a while, and we just have not been able to. All right, I'll go over that again at the end, but let's keep going. So profit zones. Profit zones don't just tell you what the what your profit margin is and how much money you can possibly make. What's the potential move for the market. Any other questions on that preview before I go on? All right, we can talk about it later too, and I'll pop my email address in here as well. We do that real quick. All right. So if you have any questions, you can always email me. So profit zones, again, they don't just tell you what the potential move is in a market or how much money you could possibly make. They actually, of course, they tell you that, and we go over that quite a bit here. But there's another part of this that's almost more important. They help you identify quality trading opportunities. So you may be looking at charts saying, wow, I'm not great at this. Maybe you're not great at this yet, identifying supply and demand zones, and you think you see a lot of levels all over the place, and which one's the good one. That's really not where you want to start your analysis. Okay. The zip code box, that's a good question. If you live in the United States, just put your zip code in. If you don't live in the United States, that's totally fine. You can either just leave it blank or put something else in there. Okay. All right. And if you have problems registering, just let me know. We can help you with that. Now, it doesn't allow? All right, I'll get you an answer on that. No problem. You know what you can put? Yeah, there you go. Just put a five-digit number. Five-digit number in there. Okay. If that doesn't work, let me know. So let's move on here. And if it's okay with FX Street, Maud, or Vicky, if you're in here, we can always go a little bit longer today too. We don't have to. We can go a little bit past the 45-minute mark. Okay, so let's go on. Get to the big point here. So now a supply or demand zone is not just going to be one candle. Okay, so let's start at the top here. Notice this red candle. Let's assume that's going to be a supply zone, right? So what we want to identify is this move right here. The bigger this move is and the stronger this move is, right, does two things for us. Gives us two key pieces of information. It makes this supply zone very high probability, and obviously also tells us we have a very, very big profit margin. Okay. So as you can see, poor, good, and best. The stronger the move away from an area and the farther price moves away from that level, right, the larger the profit zone and the higher the probability of a successful trade. So we want to see a big, strong move away, and we want to see price move far. The less that happens, the lower the reward and the lower the probability. Here's a trade that I took just the other day. I just took a screenshot of it, and I want to show it to you. Now, again, you may, and I think this is a good example because if you look at the supply and demand zones on this trade, yeah, they're probably pretty obvious to you. But when you when you look at all these other levels, all of a sudden you say, wait a second, these supply and demand zones look like that, and look like this one, and look like this one, and look like this one. What's the difference? Well, watch that move away from the level. So in other words, what alerted me to this trading opportunity, first and foremost, and this is important, is not, this was a short, so I shorted up here. So what alerted me to this opportunity was not this, necessarily this supply zone here. It was this right here, this move, okay? This strong drop in price is what caught my eye first. And when I'm doing the supply and demand grid in the mastermind community or sessions with you, I want to make sure you understand, because I don't know that I've explained it good enough. I'm not first and foremost looking for a box or a level, or a square. My eye is first looking for a strong move in a market. And then we go to the origin of that strong move, and that's where we then find the structure, the level. Okay. So once we saw a big move away from price here, away from this area here, I then say, okay, well, we've got supply up here at the origin of this drop, and the nearest fresh demand zone below current price was not till down here. This was not a fresh level. That wouldn't be a level anyway. Notice the big tail on this one. Way too much trading here, and we've been back here a number of times. So this was the fresh demand zone. Make sense? Let's move on. This is an even better example to look at. So here we had a demand zone in one of our XLT sessions. We're looking at a demand zone here in the QQQ. Jake, we'll take a look at that. Okay. So here we had a level we're looking at this one right here. So this is a screenshot of one of our live trading sessions. And in the class, not the preview, we'll actually be doing this. So let me show you this one. Okay. No fill. Oh, let's go green so we can see it. There we go. If I had a single dollar, even a quarter for every time I built a box on PowerPoint, I would have a lot of quarters. Anyway, we had a demand zone here in our recent trading session, right? Tiny little demand zone in the NASDAQ. That level was right here, and I like this example for this reason. So look at the level itself, right? That yellow shaded area. I mean, does it look easy to identify that area? I mean, does your eye go right to levels like that? Probably not, right? No. But what you need to be alerted to first is this strong move in price here. See this big rally? When you see this big rally, go down to the origin of the rally. So 3-step process. Here it comes. Look for the strong move in price first, either up or down. Then go to the origin of that move, which is down here. So now we see a couple little levels on top of each other down there. I don't want to put my mouse over it because you can't see it. But you see these two little kind of levels on top of each other? And then I see, so once we find that, we say, okay, that's where there was quite a bit of trading activity that went on. It was in the early morning hours, right at the beginning of the market. That's when banks and institutions are most active. Then step 3, put your demand zone in. Identify your demand zone. So the reason why the box or the demand zone was down here, because it looks like there's really no trading down there, right? Does everybody see that? How in that yellow shaded area, there's really not much trading, right? So what does that picture represent? What does it mean? Well, think about it. This happens to be the QQQ, just like the euro this morning. And I'll go back. We'll end with that euro. No, we don't want a retest. That's a key odds enhancer. I see your question there. So in a market, now this market is one of the highest volume, if not the highest volume market traded in the entire world, right? The entire planet. So while all this trading is going on up here in the 86.80 range, Okay? While all this trading's going on in the high, one of the highest volume markets in the world, just below, not one single transaction can take place. How is it possible that while all this trading's going on right here where I'm pointing, just below that, not one single trade is taking place? How is that possible? What's the reason for that? It's because there's a massive amount of demand down there. There's so much demand, you don't even get any trades. Make sense? Okay? You need to understand what that picture represents. It's key. Knowing that information, who in their right mind is going to place a sell order down there? Okay? So we were able to just buy there and get a profit target at the blue line, not because of this pivot low, but because we want to get out before you hit this 87.20 supply up here. Now, we'll continue on the PowerPoint in a minute, but I want to go to the Euro trade. And actually have this on a 10-minute chart. So there we go. Let's do that. Blow it up a little bit. So let me get rid of this. So again, step one, this is this morning's trade, and I see some of you took that. Nice job. Right, exactly. So, and again, all this stuff that we're getting into, believe me, we can take it deeper, and we will in that class. So, that's why I've been wanting to have hold a class like that. It's not just a class; it's a multi-part lesson series followed by multi-part, live trading application sessions. Because I want to be able to take this stuff deeper with you folks, and I feel bad that we never have the time to do it. Not to mention, there's always new people with us, so it's not fair to them either. We need to get everybody up to speed. We'll do it. Don't worry. It's coming up. We made it happen. Anyway, let's keep going. So again, step one, what alerted me and obviously some of you hopefully to this trade this morning was this strong move in price, step one. Step two, go to the origin of the move, which is down here. So now we see again, we're in a market that is very high volume. Euro against US dollar, one of the highest volume markets in the world, right? So we see all this trading taking place here and here. Now here we have a little bit of basing. Price rallies away, comes all the way back down here. So there can't be any demand up here. Does everybody understand that? Does everybody see how when price comes down, it goes right through this area? But can you understand why that's not a demand area? Price's basing goes up, comes all the way back down to here. So the fact that price came down to here tells us there can't be any significant demand up here anymore. It's either here or lower. Okay? Yeah. That's why we expect price to go right through it like it did. That's not a demand zone. However, down here, price is basing, right? And all of a sudden moves up to this level and then takes off. So down here is where we expect the demand. Okay. Now, if you look at, let me do it, let me just put a circle in here to explain this. I really want you to get this. Right in here, let me move the box. So right in that circled area, that's where the candles are, right? So trading was able to take place in that circle. Some trading, not a ton, but some. But below that circle, right here, hardly any trading took place, right? Why is that? What's the only reason? And really be objective about it. There's one wick going down. So price did go down there very briefly and then shot up like a rocket and then nothing. So you're here for, 10, 20, 30, 40 minutes, 50 minutes in this range and hardly any trading down here. Banks are big willing buyers down there. Remember, I started on the bank and institution side of the business. So it's not like I'm certainly no smarter than anybody else. This is how I was trained, and I trained my eye to see this on a price chart. It's not that complicated if you know what you're looking for. So the reason why you have no trading is because there's so much demand. Banks are big willing buyers, so much demand that you don't even, obviously again, don't get any trading. Okay. So therefore, when price came back to this level, we were looking to buy in here. for a move back up to here because, again, you've got demand down there, and based on that, as price moved down into the demand zone here, there was nothing to stop it from moving back up to here. Make sense? So that was a trade I took this morning. I see some of you took it too. Edward's referencing the dollar chart here. Yeah, let's take a look at the dollar chart. So I know we've been, every session here we go over this 81. You're probably tired of me talking about the 81.50, but it's just a fantastic level. Fantastic level. So, but something's changed. What's changed now? Since our last session together, we've been all over this 81.50 and its prices are getting close and falling. But what's changed? Now we have some new supply below the 81.50. So what does that say about the dollar? Well, we have to first assess the demand below. And when we look at the chart, if you look at all those pivot lows down there just below current price, what does that tell us about the demand side in this area as far as price goes? Well, there can't be any significant demand down here. Price has been there a few times, and it's had no problem going there. Even down here, down to 79, price went down there. Okay. So again, if you had to bet, if you were betting, would you bet that price is going to hit what price is what is the dollar likely to hit first? 82 or 79? Or even at this point, I'd say 81.50 or 79. Yeah, you see what I'm saying? So that's key information if you're trading the Forex market. I can't think of anything more important. Okay. All right. And there's still, look at this, there's still some demand here in the 136.85 zone. And it's all because your brain needs to process what this yellow box really represents. And that's a big key to doing this. Let's go back here for a moment. I want to see if I had any others to show you. Yeah, this one. Here's another trade. And again, we're going to go over a lot more of these, in that class coming up soon. But let me give you another one here. Notice these supply zones up here. Okay, but again, there are lots of levels that may look like supply or demand. If you want to make it easier on yourself, this big drop in price should be the first thing that alerts you to these levels. In other words, the order is not, okay, I need to go in and find supply levels or demand levels. I need to find a strong move in price and then go to the origin of that move and make sure that according to the odds enhancers, it's a key level. Make sense? So here we had a number of odds enhancers in play. Again, number one and number 4 are tied, really tied together. Strong drop in price away from the level. Prior to the entry here, it was a fresh level, meaning price had not come back there. Time at the level, price didn't spend much time, and then profit zone. So remember, how did price move away? Was it a strong move in price? And how far did it go? So there's really two things there, right? So if we do this, let me do that. Strength of move and how far did price move? Okay, before returning back to the level. Make sense? Now that second one, both of those hit on two things, probability and profit margin. So the farther price moves away from the area, think of it like this. The farther price moves away from an area before price returning back to the level, what that tells us is that, the farther moving price away from an area, that means whoever's buying up here when I shorted, okay, whoever's buying up here when we shorted is not just buying after any old rally in price. They're buying after a huge rally in price. Does that make sense? So the odds are stacked against them as the buyer, meaning they're stacked in your favor as the seller. And then again, we had the level on top of level concept here. Okay. And I would say out of all 5 of these, the 2 that you absolutely have to have, if you don't have these 2, I would say you absolutely don't have a trade, are these 2. Number 2 and number 4. And once, I'll take this a step further, and again, I'm kind of fast forwarding to the class, but once you get good at this, those are really going to be the 2 things you focus on. Okay. It's not that the others aren't important. It's just, the list of odds enhancers, in the beginning, it's more of it's an exercise to train your eye to identify, key market turning points and key market moves in advance. But then once you get it, your eye's going to be trained to do it. You're not going to have to go through this giant list every time. There's actually not a lot of trading here, Ethan. Okay, what we want to look for is about 3 to 6 candles, and there's no rocket science behind that. It's just that, if you say 2 candles, then everything becomes a level. More than 6 or 7, there's too much trading activity. Boyke, great question. That's a great question. So how do we know that there's still orders here? Well, again, price is trading sideways here, okay, and then it falls. So, whoever was selling here obviously had a lot to sell, but we know that they didn't. Put it this way: if supply and demand were in equilibrium here, wouldn't price just keep trading sideways here? If there was an equal amount of supply and demand here, price would just keep trading sideways at this price, but it couldn't. It didn't. It dropped, right? So that tells us that whoever was selling here did not fill all the orders that they wanted to fill. And I'll tell you, on the trading floor, that was my biggest job every day is working big orders and trying to get them filled. The bigger the order, the less likely you were to get it filled, okay? Because you just didn't have enough of the other side at that desired price level to fill the order. So this is just what that picture looks like on a price chart. Again, this is another great example. So this is going back a little ways, but this is the Fed day. Right. Yeah, I'll get to the live charts in 5 minutes or less. So if you look at this little demand level here, this is another screenshot from XLT. Yeah, and Jake, arrival is going to be a function of that profit zone. So if you get the profit zone part right, arrival takes care of itself. Okay. Yeah, let me check. You want me to make this bigger? I can probably make it a little bit bigger. How's that? So notice this little demand zone. Again, if you're just looking for those first to identify opportunities and levels, it's gonna be tough. Okay, you can do it, but you're making it hard on yourself. Instead, this big green, all these big green candles here, this big move should be this big move here should be the first thing your eye notices. And when it does, then just go down to the origin of that move, and boom, there's a level there. Does it meet the odds enhancers? Does it, equate to a high score? Yep, looks good. We put the level in. But it all started with identifying this big move here. This big move also tells us that what our initial profit zone is, and it tells us it's a pretty high probability trade because price traveled so far away from the level. Okay? The other thing that happens is, notice how when price goes up to here, it takes out all this supply. All the supply is then gone or filled. Well, I shouldn't say all of it, most of it, right? Otherwise, you didn't have enough. You need a lot of buyers to get price to fill all these orders that are sitting here, and then more buyers to get price to go higher. That's a lot of buyers you need. And finding buyers to buy after this big move in price, that's going to be tough. I mean, there's only so many retail traders out there, right? So as you can see, price comes back to the level and then shoots up up to here. Now you may look at this and say, are we just looking at a great example? Well, no. Okay. And in fact, if you saw my email just now, if you're looking at my desktop, another one of these just came in from today's session. But think about it. At the time of entry here, where was the fresh supply? Well, it's not here anymore because this rally took it out. To keep it simple, once you see the price came up to here, you know that there can't be any significant supply until this price or higher. Okay. Boyke, I'm not happy that you asked me that question because I'm going to feel a little silly answering it, but I honestly didn't even know that price charts existed for the first probably, 6 months of being on a trading floor. I had no idea. No idea. And I saw this guy walking around in the Canadian dollar pit who I kind of knew through hockey with this big roll of paper in his pocket. And I saw it one day, and I saw him going over. I'm like, what's that? He's like, these are charts. I'm like, what are charts? He's like, charts of these markets. You can chart this stuff. I'm like, wow, that's pretty cool. All right. Yeah. I see your question there about minimal pips. Yeah, we'll cover all that in time. Don't worry. Yeah. Okay. So, I don't think we need to look at any more of these examples here. I think you get the point. It's probably time to go into the live market. Real quick one here, I guess, just because, again, same thing, real quick. Yes, this level is not, may not catch your eye. If these lines went on the chart and you're looking at all these candles, is that level right there going to catch your eye really quick? Maybe, but probably not. However, this big move here will. This big move will, right? So focus on that. Okay. So that's what I'm talking about here. Big drop away is going to catch your eye. Find the level, score it out with the odds enhancers. Price comes back. Again, works out pretty well. Yesterday's grid. This is our trading from yesterday. And if you look at the S&P on the bottom and the NASDAQ, notice the strong rally in price in the NASDAQ. Notice the strong rally in price in the S&P. Yesterday, the spiders and the Qs actually gapped down right into these levels. And there was nothing to stop them from rallying. Nope, you should have sound. Okay. I know we have some more time. We'll get to the live charts in a minute, and I see some of you are asking for this. Let me pop this back into, here we go. I just put the registration link back in there. Again, for those that came late, I don't even know if there's room left to register, but hold a free preview on the 18th and 24th from noon to 12 to 12:45. I'll be delivering that. It's a preview for a full online course and live trading program that's coming up. So if you want to register for the preview, 18th or 24th, there's that link again. Okay. Let's go to the live markets. Okay. Good. Glad you got it. Yes, so let me go back and someone wanted to look at a market. Someone want to look at gold, I think? Yeah, we can look at gold, and I see, so here you see supply at 1309. Yeah, it doesn't matter what market we look at. We can look at gold, we can look at FX. We've just looked at a little of everything. So if we look at gold, I think you said you see some demand at 1309. All right, Sentinel, we'll look at that in a minute. 1309, let's see. Yeah, so just a reminder in gold, big picture, still very bearish. I think you're looking at this level right here. And hopefully, after today's lesson, what alerted you to that is that big green candle, not so much the level itself. So yeah, we've got two little levels on top of each other here. We're looking at an hourly chart. Let's just take a look at these. Oh, before I forget, thanks for the FX Street votes, by the way. I see some comments on the chat there. Appreciate that. I'm not, anyway. Just here trying to help. So I know FX Street's holding a contest this week. Wow, has FX Street grown over the years. Amazing what FX Street has done for everybody. Just linking, anybody that wants to trade FX around the world. Great stuff. So yeah, we've got a level here. This 1300, no, there's nothing in here, and this area right here that you already have a retracement. So here you've got a couple levels on top of each other. Yes, Forex starting about 1309. And again, these look okay, but what should you have alerted you to this? Today's topic is this big green candle. And the whole point is it'll make your life easier. It'll speed your analysis process up and all that good stuff. Okay. So, there's gold. I see someone else want to look, I think, at euro on a 4 hour. Is that correct? Let me just scroll up here. Let me see. Euro pound 4 hour. I think you're looking at euro pound. Here's a market we don't look at too often. So 4 hour. You're saying looking like nice supply. So I think you're probably looking at this right up here. Yeah, that would not be I think you're talking about this. If you're talking about this up here, it's much better. Yeah, but not. Oh, so you are talking about this. I got you. Yeah, it's better. Just be careful these two wicks. So let's go a smaller time frame and investigate. And I'm actually going to skip down to the 60-minute. So you see why, I want to show you why you would probably not take 90. We would not be interested in this area here because, again, we don't want to assume or conclude that there's supply in this area here. If you're new to this will probably help you. This would never be a supply zone to us. It's not physically, it's not possible for there to be unfilled sell orders sitting right here because when price was here, it actually went all the way up to here. So at the very lowest, we're going to be, our supply zone has to start at the top of those wicks. And my guess is when we go down another time frame, you're going to see something in this box here. So let's do that. Okay. Yeah, here it is. So we want to go above those and right up to that in that. Okay? All right, makes sense? Right? This is not, see, but what happens is a lot of retail traders, a lot of new traders will start shorting right here, and then they'll put their buy stop right up here in the supply zone. That's why so many people lose. Okay? That's why so many people lose. There can't be much. First of all, look at how much trading is here. If supply and demand were that out of balance here, price would never spend that much time there. It's just sitting and sitting and sitting. However, here, it spent a very short period of time. Someone has a lot to sell there. So watch for that area. That one comes in 83.05 to 83.12. Okay. All right. Let's keep going here. We can look at another market if you want to take a look at another one. Want to look at the Aussie? Sure. No problem. Let's go to this. Let's go to the spot. A lot of old levels in here, old lines. What was that? Let's see. What was that? Well, yeah, these are really old. Let me get rid of these. I'm usually looking at the futures for my own short-term trading, but these are probably from way back. All right. So the Aussie has some great levels this morning. Let me just make this a little smaller. So big picture, one level that you have to be aware of in the Aussie, as this goes a little bit higher, you're going to start to hit this area right up here. I'm not saying this is the best picture supply ever, but price is not likely to cruise through the 91 even level in the Aussie. So really, really watch for that. I would suggest when you get just above this pivot high that you see here on the weekly, that's when you're probably going to run. That's when the Aussie's going to run into trouble and likely turn a little bit lower. However, we do have some demand below current price, right? If you start looking at these bigger time frames, let's try to make this one a 60. Okay, we do have some nice. If we do get a decline in the Aussie, that's not that far down. Now, what's another thing that makes this Aussie demand zone desirable? Dollar supply, right? Any demand zones, and I'll tell you, there's another level that we've been looking at here in FX Street for a little while. I know price is kind of far from there now, but remember that euro demand down there. That could end up being like the buy of the year if it gets down there. And euro into demand, dollar into one of these supply zones. And, right? I don't know that it's going to get down there, but if it does, we'll have this dollar into demand, supply, everything's going to line up. We get those trades. I mean, any of you that have been with us for a few years in FX Street here, we get those a couple, 2-3 times a year, the big ones. So that's one that's on the radar. Let's see here. I see we're just about out of time, and FX Street let me know there is a some will get canceled, Boyke, for sure. Okay. But there still should be plenty left there, if you get the level right. Okay, so I know we stay longer, but there's actually a webinar starting right after us, so FX Street let me know. There's that registration again if you need that. I can pop that in the chat. Again, I apologize in advance if it's when it gets filled up. But so again, for those that registered, I'll see you on the 18th or 21st, and that is a 45-minute preview for this full program. It's for FX Street members only, and very excited about it. And again, happy Valentine's Day. Have a great weekend, everybody. Thanks for your time, and hopefully that was helpful. My email address is in there, too, if you have any questions. Thanks again, and we'll see you soon. And thanks again for all the voting and all that for the FX Street Awards. And thanks, FX Street. All right. I think I thanked everybody. Have a great day.